Hi, my name is Rick Blanke, Managing Partner of Blanke Schein Wealth Management, and everybody's favorite day is coming up, Tax Day, April 15th. So in today's episode of Financial Foundation, we wanted to discuss the 2021 tax season and how it's different from the 2020 tax season. First, I just want to touch on a couple basic points. The first being, as I mentioned before, April 15th is tax day, so you have to pay your taxes on or before that date. If you're not going to be able to, you can file for an extension, and that'll give you a few extra months. The other basic point is that the 2020 standard deduction has increased to $12,400 for single filers and $24,800 for a married couple. So next, let me give a refresher on how tax brackets and tax rates work. So, for example, let's say you're single and you make $75,000. That would put you in the 22% tax bracket. But that's not a flat tax of 22% on the entire $75,000. It's a tiered schedule. So the first $9,800 would be taxed at 10%. The money you made between $9,800 and $40,000 would be taxed at 12%. And the rest, up to the $75,000, would be taxed at 22%. So it's not a flat tax, it's a tiered schedule, but your tax rate would be 22%. Next, I want to talk about the difference between tax deductions and tax credits. Tax deductions will lower the amount of income that is subject to federal income taxes, while tax credits will offset your tax bill dollar for dollar. Now, there's two kinds of tax credits, refundable and non-refundable. Refundable tax credits, if they lower your tax bill below the amount that you owe in its entirety, you'll get a refund. Non-refundable may lower your tax bill to zero or beyond, but you won't get a refund. There are a few credits and deductions that are fairly common that you should be aware of. The first is the charitable deduction. The CARES Act allows you to deduct up to 100% of your AGI, or adjusted gross income, in qualified charitable donations, if you choose to itemize your deductions. If you don't itemize, you can't use it, but if you choose to itemize your deductions, this is a great tool to have. Another common deduction is the business deduction. If you're self-employed, there are a ton of different deductions that are at your disposal, whether it be travel expenses or home office deduction. Next is the earned income tax credit. This is a refundable tax credit that's aimed at helping low to middle income workers. Interestingly enough, 1 of every 5 eligible workers either don't claim this benefit or they don't file a tax return at all. The last credit we're going to discuss is the child tax credit. Now, this is a refundable tax credit, and you can claim up to $2,000 on your federal income taxes per child. There are some limitations though, income limitations. So if you're single and you make above $200,000 a year, you're not going to qualify. Likewise, if you're married and you make above $400,000 a year, you're also not going to qualify. Lastly, we're always here to use as a sounding board. We'd love to strategize with your CPA. If you have any questions and want to reach out, click the link below, send me an email, give me a call. I'd love to have the conversation with you. I look forward to hearing from you soon. Thanks.